Good morning. My name is Britton Brown. I'm the founder of Trade Hive, and I'm here to show you how I approach every morning's opening. So, kind of a pre-opening routine, and I'm going to give you a playbook. I give this playbook away for free uh, pretty much every day of the week for you. You can get that free on my website. I do offer coaching and training for traders more on an institutional level, but I've kind of opened up some things for those aspiring traders that are trying to get to the professional side of things. Um, but anyway, I had mentioned yesterday, did my first YouTube video for you. Um, I'm, it's a little rough in the beginning, but I think I'll kind of smooth things out as I transition through the process. With that said, today is FOMC day. And so this is, I don't expect a lot this morning. I think most of the move was done last night and was opening an opportunity for a potential sell. This morning, I did see about 6:20 Central Time. Nice little liquidity sweep down to the bottom side. Market tried to recover. We're kind of in this big box as far as if you were looking at about a 5-minute scenario, and I think what they're going to try to do is accelerate this down a little bit lower. It's currently 7:40 Central Time, so I think that the pain's to the downside right now. There's not much of a reason. Typically, it's FOMC day. You'll have some good trading first thing in the morning. More so on the institutional level, a balancing act before the numbers. There's not going to be a lot done today. Don't anticipate that. I was a little surprised last night that they just kept rolling with Asia and then into London. But I kind of smell a little bit of a trap up here. And so we'll talk about that. I'm going to switch over. I'm going to show you, walk you through kind of how I approach the day. There's from a freebie standpoint. But I'm going to talk about probabilities, what the overall direction of the trend is, how I set that up. It's always going to start with a higher time frame. And so I'm going to start with the daily. I'll walk you from the daily to the 4-hour to the 1-hour and kind of what I posted already. I typically try to get the post out on a playbook for the general public sometime before 8 a.m. Today I was up around 4:30, and yesterday same thing. Trying to set it up so that you have enough time to prepare for the day. But the point here is that as a professional trader for over 30 years, I've managed institutional desks. I was a pit trader, one of the largest pit traders in the natural gas pit, and then made the transition over to the screen. And obviously, markets changed a lot over the time frame. But I still keep from the standpoint and teach on an institutional level how we approach the market. It's about probabilities. You want consistency. It's about probabilities and understanding your RU. And I talk a little bit about that in some of my other stuff that I put on my website. If you have not checked out my COT report, that's Commitment to Traders report. I do that over the weekend for everybody. I would highly suggest you look that over on at least by Sunday, so you got a pretty good plan for the new week. But I cover extensively what institutions are doing, what those hedge funds are doing, what their positions are, why they're doing what they're doing, and hopefully that helps you throughout the week. But I'm going to switch over to the screen, and we will talk about ultimately what we're looking at. This is the daily chart, and when I look at the daily here, the key components for me as I approach it is I'm always looking at, and I've used for a long time, a lot of years, the 9 EMA and the 32 EMA. And from a scalper standpoint, when we're trending on a 5-minute, in the 15, I'm buying the 9 every time it touches that to get back into that move. Typically what you will see is the market will pull back for that. But I use it on all time frames, and the reason I do that is because I want to see if there's confluence. Is the 9 EMA above the 32? It's just a quick macro view to give me a bias. When I've got it above the 32 in the daily, in the 4 hour, in the 60 minute, the 30, the 15, and the 5, you can bet we're bullish for the day. So you'll hear me talk a lot about that. Obviously, the 9 EMA is above the 32. When you see the white, the green, and the red trend lines, those are imbalanced trend lines. In essence, if you're an ICT guy, or you look at imbalances, or what do they call fair value gaps, right? We've had different names for that, and look at imbalances since the early 70s. So, I hate to break it to you, ICT did not come up with a new idea there. But anyway, that's beside the point. The white, the green, the white is the daily imbalance trend line. Typically, you're looking at a weekly when you're looking at the daily here on the green trend line, and then the red is your monthly. And so those are zones you want to know about. That's the market really telling us where are the buyers or sellers showing up, where should there be some defense, where's the likely pullbacks, what should hold. You'll also see boxes. As you can see, we are working off of a red box. We had a downside target, which is basically a measured move off the box itself. When you see manipulation, Wyckoff talks about, you go into contraction and expansion, and then you find a trend. The master patterns basically Wyckoff, right? So we look at that contraction point, and then we look at the manipulation higher, and then the move down. You can see the blue line, the dark blue line going up, is our overall trend line. We broke through it, we're back into it. There is an indicator down below. I don't really use a lot of indicators, but I do post the COT data. Yellow is you have institutional buying. We saw some buying, some hedge funds taking some risk off the table, being short. They're predominantly short, by the way, if you're not aware of that. However, and then the pink line is going to be a regression, and basically it's the angle of which these boxes are stacking. In essence, we're going to contract and then we're going to expand. We're going to contract, we're going to expand, right? The majority of the business is being done on an institutional level. Believe it or not, they're not chasing. I know that most people think that, I won't say you all, most people think that they are trying to stop people out. That is not exactly true. They could care less about your 1 lot or 5 lot order. They need size and they need balance. So when you see that, that's predominantly where institutions are doing the heavy lifting. We do track VWAP, and we'll get more into that later. However, my point is that we've got liquidity sitting above that all-time high on the daily, waiting. That is the yellow dotted line on the very top. We're still working off the red box here. That box, the way I look at it is it really should be turning green here, and I would expect that with a new high. Hopefully we can push up to that. We've got a nice imbalance below us. We call them in the institutional world MVGs. So, and what we're looking for is the middle line of that MVG. That's the median, or some people call it the fair value. That will be an area of interest for institutions and how that holds up. But in the meantime, we have a nice bullish structure, and the market is obviously trying to push for those new all-time highs. On a 4 hour, I'm going to pull that up real quick. So this is the 4 hour, works the same way. Obviously, we're just kind of walking down the ladder here. Main thing I want you to take away on the daily is we are bullish. Bullish continuation. I said probabilities are a big thing. If you don't look at a trade through a probability and a risk standpoint, you will not be doing this very long, or certainly will never be a professional at it. Maybe you can have fun with your prop firms. But let's talk about probabilities on the daily before I hit the 4 hour. Bullish continuation, probability is 62%. The range digestion day is 23%. That seems a little low to me. The market's just really kind of taken off. I think, this is a quant program, right? And so it's not taking into consideration FOMC. I would say that's probably more like a 50% level on that. A large rejection up here, meaning greater than 200 points, is going to be about a 15% probability. On the 4-hour, we're working off of a gray box off the bottom. That's not unusual. The market contracts on the bottom, doesn't get any follow through, and we see a massive move. When you look at what was going on, we had a little bit of manipulation on the previous red box. You can see that it went up, we wicked, market went back down, we made a low, tried to test the trend line, came back up, didn't get any follow through at the fair value of that box, and then they punished it. So, I said yesterday, and you'll hear me say this a lot, institutions are not playing for 100 points, right? 100 handles is nothing for them. They want 800 minimum. They're looking for 1,000 to 1,200 before they start taking risk off the table. We're in an area that it's kind of going to be a risk off the table. So I'm suspect. Even if FOMC comes out and all of a sudden we just skyrocket up or we get some news, I have a hard time believing that the big money handlers are going to want to buy that. They will need more constructive basis to be long at these types of levels. They're predominantly heavy long, and so this is about that point where they like to use that strength to get out of it. With that said, the 9 EMA is well above the 32. We are above the VWAP. Those are going to be anchor points to target on the downside if this market starts to weaken a little bit. Acceptance above 26,312 is going to be an expansion area. I think that's going to trigger your lighter traders. Your momentum players are going to get on that bandwagon. A rejection from that 312, 26,312, 350 level is going to rotate lower. And I'm as I mentioned before, I'm suspect up here, even an all-time high. Could be manipulation. If we could get that early in the day before the rates, I would think that I'd be more biased to the downside. Today's not a bad day to stand aside, guys. That's what I would tell you. Acceptance and continuation on the probability side is 48%. Rejection and rotation, meaning a 200 to 350 points move to the downside, is about 32%, and a hard rejection is 20. That is a greater than 400 point move. I put those out there because I want to know what those probabilities are. As I mentioned yesterday, it's really important that just because a probability is super low, let's say it like yesterday, 12, 14%, the call yesterday was spot on. Go sweep the liquidity on the downside in the morning and then start running higher. That's exactly what we did. There was about a 14% probability that we would reject up there and go down. That doesn't mean I just reject the 14%. That is an area even at 20%. I want to know what that is because that's an unlikely situation. But the herd mentality is that if that unlikely situation pops up, it could get really ugly. So keep that in mind. Let me switch over to the hourly as we break this down, and then we'll get to the 5-minute, and I will wrap this up for you. I try not to make these too long, but I know that you don't know me, so I need to kind of teach you that I know my shit. Sorry. Currently, we just popped a gray box on the 1 hour. This is incredibly important. Typically, gray boxes in the middle of a range is going to be more explosion, more directional with the range. Again, I feel a little toppy up here based on what I know where the institutions are positioned and how I know that this is an area that the risk manager is walking around that floor saying, hey, we need to trim some risk off the table right here. So keeping that in mind, it doesn't mean that they're going to come in and throw up all over the market. It just means that they're going to be a catalyst moving through with speed. So with that said, that is a little bit interesting to me. The previous box is a green with a red trim. That is a high volatility. Typically, I see that about 3/4 of a move to either the high side or the downside. And believe it or not, I know it feels very trendy and very much we're on the upside of a huge bull trend, especially when you move 1,200 points. But guys, we're really in a range. I mean, if you haven't figured that one out, you need to go back to technical analysis. And I'm just being sarcastic, but the reality is we're bouncing around here, and unless we have continuation with solid movement above the all-time highs, that trend is still just chopping around. So when you look at this with a green with a red trim box, we were able to hit one downside projection. We came back up and never came back for the second one. We've hit both of those upside projections, and you can see that. I'm just going to kind of move my mouse around that. This upside projection was hit. We've now hit we just hit that second one. That's a huge move. We're running into traffic again. When you see those yellow lines, those are institutional risk off scenarios where there should be liquidity. So there's a couple things that can happen with this gray box, right? With all prior upside targets met, we're above all the trend lines. When you're looking at a white, that is the trend line for the hourly. When you're looking at the green trend line, that is the daily. And then you can go right, or sorry, that is the 4 hour. And then the red one is going to be your daily trend line. So with that said, we're above all the trend lines. The 90 EMA is stretched above the 32. Momentum is extended here. That is the key I want to just kind of throw at you. So the key question I would say is, does this gray box launch, or does it manipulate then reverse? Does it basically, do we push lower and then go up to the new highs, making it a red box, or do we push higher, get above wick, and then we crash lower? So, those are the outcomes you're looking at. Is it gray to green, where we go up, we go down, we go back up, we make another new high, and we extend this out, and then we make another green box, and then eventually a green with a red? Or do we just stay chop and trap? Likelihood is we stay chopped and trapped till FOMC. But continuation high probability-wise, 44%. Manipulation is not as high as it was yesterday. Yesterday we came in, we were at 62% probability for trend continuation. We looked for a pullback. That was the ideal situation. We kind of knew what was on the table. We're running out of gas here, which is why the probabilities are going down. Manipulation and reversal is at 36%. Range chop is 20. Again, as I said before, it's FOMC day. The quant program is not necessarily running off of FOMC. If it was, I think you would see that range chop around 40% until FOMC. Now, considering FOMC, once it takes off, we should see a really good move one way or the other. Hope you're right either way. So, lastly, 5 minute. I'm going to pull this up, and then we'll finish with just checking out Bookmap to kind of look at some key zones there. On the 5 minute, we are structurally off of a red box. We have the manipulation higher. We didn't make a new high, and now we are looking at downside targets. Downside target is sitting at 26, 228, 25. That is what we're looking at going to. I think it's a very high probability, 68% we should go hit that. Why not? Right? We don't have much of a directional pull one way or the other this morning. So that's a pretty solid target. Now, what if we don't hit that and we start heading back up above the fair value, and then we start pushing up through those highs? Obviously, that's going to say a lot to me from a fundamental standpoint, a structural standpoint. We are above the VWAP. 90 EMA is currently below the 32. We are working against the overall trend right now, so keep that in mind. I do not like counter trend trades because just as fast as they can work, just as even faster they can lose. So if you've been doing this for a long time, you understand what I'm talking about. Basic interpretation: short-term imbalance inside a larger bullish structure. It's a classic lower time frame conflict. Pull back to the red target box. Quant program saying 41%. I think it's a little bit higher considering the situation. and look for that acceleration on that 1 hour. Shallow dip, then reclaim VWAP. That's a 39% probability. And immediate continuation higher, that's the lower probability. I will watch that 9 and 32 on the 5. Once it relines back up with the higher time frames, you could have a really solid move to the upside if that does happen. Again, this is not trading advice. This is educational use only. Wish you guys the best. I'm going to go ahead and flip over to this. And sorry about the blank screen. Anyway, wish you guys all the best today. Hope that helps you out. The whole idea is walk you through more of an institutional mindset of how we approach the day, and ultimately get you in the mindset that probabilities and risk. Do not take a trade without understanding what that risk is first. That's the best advice I can give you. And today may be one of those days, you know. Here's a little tip for you just to finish up. If you have nothing to do, get in the charts. Don't just sit there. Don't get bored. Have a purpose, right? I always tell the traders, hey man, you got to have a purpose. If you're not doing something, you know, maybe it's looking at the heat map. Maybe it's in looking at different trade setups, looking at your historical. Hopefully you journal. Go back. What were those emotions? That's the most important part of the journal, your emotional aspect of a trade. And then look at the trade, break it down and say, you know, hey, what could I have done better, right? It's not about your win ratio, right? Your success ratio. I know so many people talk about P&L, so many people talk about, oh, my win rate's 78%. Let me tell you, if I hear somebody tell me it's 78%, I am not impressed. I know they are fear-based. They are not letting their trades run. That's a problem. Really, the sweet spot is right between 46% and that 58%. I would say on the highest range, 64. But then now all of a sudden, if you start looking at their data, they're getting out of trades a little bit too fast. That 48 to 58%, those guys are the guys that are making the majority of the money. There are lots of guys, lots of really good traders with a 30% win rate, right? But they make gobs of money. That's all that really matters is are you able to let your trades breathe? Are you controlling risk, right? And most importantly is risk. So that's what I'm going to leave you with today. Again, thank you for watching. Hopefully this helped you out. Appreciate all you guys. Thank you. Bye-bye.